Well, today the Chinese devalued their currency and the global markets are throwing a temper tantrum. Should you be worried? Well, personally, I'm not. I just want to give you a quick video to let you know that I think, once again, this is going to be another buying opportunity. Although I am being patient, and today, other than selling a few puts, I'm sitting tight, at least for the time being, and let me tell you why. Well, first off, let's start off by looking at a chart of the S&P 500. And I'm going to do this using Yahoo Finance so you can follow along at home and draw in your own moving averages. And let's focus in just on these past couple weeks of trade. On July 26, 2019, the S&P 500 hit an all-time record high. A lot of that, I believe, was anticipation of the Federal Reserve cutting interest rates. And a few days later, when the Fed did cut rates on July 31st, I think this was a classic example of buy the rumor, sell the news, where the market had already priced in a rate cut, and they weren't happy that the Federal Reserve didn't act more dovish and promise more cuts in the future. And then it was the next day that President Trump said that they were having problems with the negotiations with China, and therefore he would be imposing additional tariffs on Chinese products. And as would be expected, just like we've seen over the past 18 months, the market didn't like that at all. And although there was a precipitous drop in the S&P 500, you can see that on Friday it did close out the week with the S&P bouncing off its 50-day moving average, which I have drawn here with a red line, thus showing that we did get firm support at the 50-day moving average on Friday. That's always a good sign. But then, just like clockwork, Monday morning, China announced that they would be retaliating by devaluing their currency. This threw all the global markets into a temper tantrum. The S&P opened this morning gapping down below the 50-day moving average and finding absolutely no support at the 100-day moving average. That's the line that I have drawn in yellow. But again, on a positive note, the S&P 500 did close up significantly above the 200-day moving average. Now, will this all blow over in a few days? I have no idea, but for me personally, I'm waiting to buy until the S&P 500 at least touches the 200-day moving average, or even better yet, breaks down through the 200-day moving average. And that's where I have this purple line drawn here at approximately 2774 on the S&P 500. Now, one final thought. I know there's a lot of people that are always concerned when the market dips down like this, but I'll remind you to almost exactly 2 years to the day. That was the last time the Chinese drastically and surprisingly devalued a currency. That was in August of 2015. So it's almost 2 years to the day. If we look at that price performance on a chart, the blue line here is the S&P 500 for the year 2015. Once the Chinese surprisingly devalued their currency, there was about a 2-week move where the S&P 500 dropped about 12% from its recent high, but then over a period of about 3 months, it did snap back and recover. The red line I have drawn in here is the S&P 500 so far in 2019. It's following a very similar pattern from that of 2015, and I won't be at all surprised to see the S&P 500 close this year out somewhere around 3,000. If you'd like a closer look at this chart, you can find it in today's blog post over at my firm's website, investablewealth.com. And today I've also posted a full-length audio version of the Wealthsteading podcast. You can find that directly at wealthsteading.com or on your favorite podcast syndicator. Well, as always, thanks for watching. Until the next time, this is John Pugliano wishing you the very best returns.